Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Hope you guys have a wonderful upcoming weekend, especially the Super Bowl this Sunday. We do got a lot of economic news releases to go over this morning, so we're just going to jump right into it. And we'll start off with the non-farm payrolls for the month of January. We had 196,000 last month in December. We actually had some revisions the last 2 months, which created another 120,000 new jobs between the two months that were revised. This month, they're forecasting 170,000 new jobs, and it came in at a disappointing 157. So when the 157 came out, obviously the market was disappointed, but when they heard about the revision upwards for 120,000 new jobs for the past 2 months, they kind of subsided a little bit. Now we also have the unemployment rate for the month of January. We had a 7.8 back in December. They were forecasting to come down a little bit, and it actually went to the other direction. So the bond market was liking this a little bit because remember we're talking about the Fed using the unemployment rate as well as inflation as the new indicator for if they're going to continue purchasing the mortgage-backed securities on their quantitative easing, if they're going to continue that. And now this is going the opposite direction. So obviously the bond market likes that quick fix, where the Fed's buying more of their bonds and stuff. So now we also got the market PMI for the month of January. We had a 56.1 for December. They figured it'd be about the same, and it dropped a little bit. So manufacturing dropped a little bit overall. And then we got the consumer sentiment for the month of January. This is the final revision, so we had a 71.3. And we kind of figured it'd tick up a little bit, and it jumped up to 73.8. Then we got the ISM. This is manufacturing as well. And for the month of January, we had a 50.2, so it's just barely expanding a little bit as we're just barely over 50. And we've estimated jump up to 51, and it jumped up to 53.1. So manufacturing in this section overall was much better. Remember when we saw the Chicago yesterday? It was looking a lot better for Chicago. Now we got construction spending for the month of December. We had a 0.1% increase for the month of November. We figured an increase for December, and it jumped up a little bit higher than forecast. So overall, not bad news. The unemployment numbers are really kind of what we're looking at, but because they had the revisions for improvement over the previous 2 months, and then even though this month's reading was a little disappointing, and then the unemployment rate going up. Otherwise, the news wasn't too bad. Like I said, the PMI was a little bit shorter than what we wanted. Consumer sentiment was better. ISM was better. Construction spending was better. So not too bad. So let's jump over to the headline news here. And right now, the stock market's up, shaking that off. It's kind of on this torrid pace right now. We're about the highest we've seen since '07. Dow touched at one point 14,000 today, which is basically the highest we've seen the Dow reach in the 14,000 range at the height. So we're kind of reaching those points right now. But on the other side of the tracks, we got the overseas. We got the euro. Their PMI is down. So remember, they're technically in a recession. But in China, it went up a little bit. So they have two different other indexes over there that kind of contradict each other as to how much they improve. But there was at least a slight improvement in their PMI in China. Let's go ahead and take a look at the bond market. So with the news, especially on the unemployment, we actually shot up a bit. We were way up here quite a bit, but right now we're currently about 25 basis points higher than where we left off. So we take off from here. We pulled back, touched the floor here, and then we pulled back yesterday. So we were still down for the day. Today we have this opening gap here. At some point, most likely will close, and we shot way up here, even touched off the 10-day moving average. But pulled back since the day. A lot of that has to do with the more money going into the equity market since the stock market's been more on a torrid pace. So we got to be careful here and watch to see what the stock market's doing. If the stock market's continuing to improve, that's going to pull money from the bond market or worsen rates. But right now, as of right now, the rates are better than what we saw yesterday. So we have an improvement in the interest rates so far today. But again, that could change. We do got this gap here. At some point, we'll close up. And also, again, the stock market, competing for dollars with the bond market. So, all right, folks, thanks for stopping by. Thanks for watching. Certainly appreciate your support here. You guys have a wonderful weekend, and we will see you guys on Monday. If you guys like to receive these on a daily basis, just stop by mikesdailymarketreport.com, where you could subscribe in the upper right hand corner, and we will email these once they're uploaded to you. We don't share your information, nor do we send you any other emails other than just these videos here. Have a wonderful day.